Countless indicators are piling up, showing the truth of this predicament. It can't be reversed. Those in control will not allow their plans to be derailed. We as individuals, however, can analyze, see the trends, and react accordingly. You came here for the truth, so let me unveil that for you. Today, we are going to look at several indicators showing you the global economic collapse. Commercial and industrial loans. You are seeing this on a percentage basis over the past few years declining. May I remind you of the mass vacancies that are occurring specifically with American malls. You look at the abandoned malls that exist, and it's not just one or two, it is a growing trend that is very serious. Consumer Price Index, looking at the rent of primary residence over the past 10 years, this has been increasing constantly. And this would be fine if an individual's income was keeping up, but we know that isn't the case. I'll show you that in a minute. Single-family rentals, either detached homes or townhomes, are developing faster than any other portion of the housing market. But check this out. These rentals outpace both single-family home purchases and apartment-style living. So, what's going on with rentals? They are becoming more pervasive. Almost all the housing demand in recent years has been filled by rental units. This individual stated that the single-family rentals have gone up 30% in the last 3 years. That is a huge number in such a short period of time. So we have rentals. You know, there was a big change that occurred. During the housing boom, we saw many people moving out of rental units and getting into subprime type mortgages. They were able to afford a home. That trend reversed. After they had to hand in their keys, they went to rental units. And then there was a recovery, supposedly. And the trend started reversing, and it looks like rents are the name of the game again. Total revolving credit, owned and securitized, I love this word, and you'll see that recently this has picked up. There was some deleveraging that occurred, but that doesn't last long. And it's, by the way, total revolving credit, essentially what we're looking at is credit card debt. This is something that just continues to grow. People don't learn their lesson. Look at what happened last time. A lot of people got hurt. All right. Civilian labor force participation rate. You'll see that declining. That is the red line over the past, well, this shows you from the 90s essentially. And looking at this unemployment rate, which mirrors it exactly, doesn't make a single ounce of sense. How the amount of people actually working are declining here. At the same time, this fake unemployment rate, I mean, I don't know how they get away with it. I really don't. It's silly. It's really silly. Look at this. This is a moving image here. Median ages of Europe. And you'll see that as time goes on, the predictions for the aging populations. And it seems to be quite pervasive. You can see that it's not just one country or two, it seems to be everywhere. And these numbers continue to increase as the years go on. Countries like Italy, for example, are worse off than some others, but you see it as a trend regardless. Now, I don't know how they calculated this exactly. I thought it was really interesting though. Interest rates at 5,000-year lows. You can see there's some time in between here that's unknown, but just look at where it is today, and you can see that over time, on a long enough timeline, interest rates are declining. And in real terms, depending on where you look, you see these in the negative. Negative interest rates. This is a world that nobody ever thought could have existed. Wall Street has boomed, Main Street has not. So you can see the stock markets here on the rise, whereas you look at the US labor participation rate, what I showed you earlier, on a decline. Central banks print money to buy shares. They don't print money to give to you and I. I'm not suggesting they even should. I don't think they should be printing money to begin with. But that's just the way it is. Central banks do this to help out their friends. Japanification of interest rates. Wall Street inequality worsens. I thought this was interesting because you can see the global equities, excluding the US, quite stagnant. However, since the financial crisis, US stocks have been rising and rising and rising, making new highs all the time. It's a big difference because central banks around the world are buying US stocks. They're not buying global stocks. Maybe they are, but not to the same degree that they're buying from the US. And yet the liquidity supernova will end. You can see QE1, QE2, QE3, and where will it go? Well, let me tell you something. The Federal Reserve, they made this claim when Janet was the boss. Who's the boss? Apparently Janet. Not anymore though. She said, it's now come the time that we will stop printing money. We're going to reverse our balance sheet. And that was to be done in October. As I record this video, we will soon be in the second week of November. And nothing's been done. They haven't done it yet. They said they would do it, made the market continue higher, and yet nothing. No action. Just talk. So we'll see. They might do it, but they've already lied on their timing, which they do every single time. So we'll see where it goes. That's all for this video. If you found it informative, please give me a thumbs up. And last but not least, if you found this video informative, I know you will find my books, The Money GPS, and my newer release, Global Economic Collapse, even more informative. You can flip through these books at Amazon. They have a look inside feature that will allow you to do that. Links are in the description below. Take care.